Welcome, everyone. It's the Crypto Lark, and I'm very excited to have on today Sasha from Own. Sasha, welcome.
Thank you. Thank you, CryptoLock, for having me at this interview. Yeah, thanks very much.
For sure, absolutely a pleasure to have you on. Now, the reason I've got you on today is because you're in charge of Own. Now, Own is particularly dealing with security tokens, and this is such an interesting topic. And we're going to be really diving into the security token industry and trying to understand that, trying to give everyone out there in the audience information on what security tokens are really at a bit of a deeper level. But Sasha, before we kind of jump into that, can you just tell us what are you guys exactly doing over at Own?
Absolutely. Yeah. So, yeah, we come from the publicly listed industry. So, equities and shares effectively. And in 2017, we saw an opportunity to really focus on private businesses. I mean, private businesses as a whole make up 99% of businesses worldwide. They're a huge population and they're a huge industry in itself. And they basically carry most economies. Yeah. Yet they are very, very underserviced in the sense. So getting capital for private businesses is hard. You have to go to a bank, you have to go to a venture capitalist, you potentially do an IPO, and the fees are crazy. The fees are really, really, really high. So we've seen what's happening in the publicly listed space, and we wanted to implement the same tools and techniques and methodologies for private businesses with absolute fee reduction, reducing the fees, making it simple, almost like a one-click process for a private business to raise capital or to get funding or manage their shareholders. And that's what Own is all about. It's not just about the issuance, it's also about the servicing. So every business has members and shareholders, and we wanted simple tools to manage that. And that's what we've been doing since 2017.
And that's a massive innovation because all these services are so important. Just as an interesting question, to launch an IPO or something, what kind of money are we talking about here? How much is that actually going to cost the company to do these kind of, securities?
Yeah, yeah. I mean, if you do an IPO, it's usually, roughly speaking, 10% of the capital that you're raising goes into fees. You pay lawyers, you pay analysts, you pay, marketing, the regulator and all that. So that is just the issuance bit. So to do an IPO, 10% of what you're raising
Oh
goes
my
straight
God.
back to all the services. Yeah,
I'm just thinking about like
absolutely.
the
Yeah.
Facebook IPO. Like, oh my God, they made a lot of money doing that.
Absolutely. And the funny thing is, the bigger the IPOs, so for example, Facebook and some of the other bigger ones, the fees are a little bit less, but because the money pot, they make billions and billions and they raise billions. So
That's
you
right.
get a reduction of like 1 or 2% for the big ones, yeah, which is still a lot.
Like, hey, we're not going to take 2 billion, we're going to take 1.8 billion. Thank you
Yeah,
very much for your business.
yeah, absolutely.
Oh, that's wild. And so obviously we're talking that's for the really big ones. I know a lot of companies aren't paying $1 billion, but they are paying a lot of money. So what kind of fee reduction are we actually talking about here via blockchain implementations?
Well, I mean, if you look at all the funding mechanisms, right? You go to a venture capitalist and they help you raise seed funding or round A or so. They might take 10, 20% of equity in your business as a whole. So you're paying not in terms of fees, but you're paying in terms of you're giving up equity. If you go to a bank, again, it's 7, 8 to 10% for private business, or, plus you have ongoing interest rates that you have to pay, could be 4 or 5%. Then you have the equity crowdfunders, which are kind of like a little bit similar in the sense, and they charge between 3 to 5, 6, 7%. Our aim is to be much, much lower than the equity crowdfunders because they're kind of like the cheapest where you can go through at the moment. So yeah, I mean, it depends on a case by case, but roughly speaking, it's 1.5, maybe 2 to 3% that we would
Wow.
charge for. Yeah, yeah, so significantly lower. Yeah,
Significantly lower. I mean, we're talking again. Let's throw out to something like the Facebook IPO. We're talking $1 billion plus saved in fees. Just as an example, right? I know that most
yeah,
companies are not Facebook or any of these other giant
yeah,
mega corporations. Most companies are much more modest, but still that
yeah.
adds up. And especially for the smaller companies, that reduction in fees means a lot to their end of year bottom line when it comes down to it. So that's also something really important to keep in mind. Now,
Yeah.
security tokens in of themselves are really a big step forward in the way that investing works. I mean, the potential for 24/7 markets and to bring more people in. What is the size, the current size, perhaps maybe the potential size of the security token industry?
Well, the tokenization industry is, is growing from about 1 billion in 2018 to 2.6 trillion, I think, by 2023. If you look at the total size of equities in private businesses, it's in the trillions, right? You can throw around numbers, but anything you kind of like is kind of made up. So, but it's $1 trillion industry. And especially when you look at private businesses, I mean, that number is just crazy. And so there are opportunities, because the reality is every business needs capital. Every business needs cash at some stage. They will go through a bank. They will go through a VC. They will go through an equity crowdfunder. Every business needs cash. And, so that's the industry effectively.
And it's going to be massive when it comes down to it, because there's so much that's outside of the system in terms of it's hard to get in with these venture capital firms. It's hard to get onto Wall Street or something like this, right? It's not easy for a lot of business, especially for the small and medium-sized businesses. This is definitely a big step for them. In terms of the security tokens, what kind of security token actually interests you the most? Like, are you most about like, okay, real estate, that's the kind of security token I want to see, or is it all just about, okay, businesses and I want to see, X kind of businesses on the blockchain?
There are a number of security tokens that are currently being issued. At the moment, you hear a lot about the first security token in Singapore, the first security token in Germany, and all that. And you need to really deep dive into that, because there's a little bit of a pattern that is evolving, similar like what happened with ICOs and utility tokens, that you get security tokens that are effectively a voucher. So you get basically a voucher based on certain proceeds in future without actual real equity or voting rights or dividends attached to that. So there's a lot of smart lawyers around the world that are building some constructs and processes that aren't really in the true sense of ownership. And that's the stuff we don't really want to deal with. The equity-backed tokens, the security tokens that we're looking at, are actual equity-backed. So you have an ownership in a business, you have a certain percentage, you are a shareholder, and you get voting rights and dividend rights, which is really, really, really important. Not this kind of setup where you have a voucher depending on X, Y, and Z, and you really need to read the prospectus to understand it. And we're seeing a lot happening around the world where people are kind of trying to get around the whole ownership side of things, which is actually the true sense of security tokens in my opinion. And with regards to the industry you were asking, is it real estate? Is it kind of warehouse, industrial, factory? It's pretty much anything. We get a lot of requests from, traditional businesses, which we're very, very interested in. There's a lot of startups, they have a white paper and they have an idea. And these are usually a bit harder to judge and to help and support, because it's an idea, it's not an established business. Our focus is pretty much on established businesses or on great startups that have a brilliant idea, that have a good management team, they have a good financial, they have some background and experience, and they're just kind of, they look okay. Oil and gas is a very, very difficult area. It's a red flag industry. Real estate is kind of a red flag industry as well, because there's a lot of dodgy players in that sense. But you're seeing a lot of real estate stuff popping up now, because these guys are they're very capital hungry. They need a lot of cash to build their projects and all that. But the failure rate can be quite high. So you got to be careful with that. Yeah.
It totally makes sense why you're working with established companies, or like you said, very promising startups. And I think we'll see this situation where everything gets tokenized at some point in the world, and there will be a lot of not good financial opportunities within everything being tokenized. And that's the reality of the situation. Now, what you're talking about here is a kind of the difference between, I guess, a security token versus a tokenized security. Is that kind of potentially a difference where you're saying we're focused on bringing in companies where you're going to basically put a share of that company on the blockchain that can be moved around? Is that kind of the difference here?
Yeah. I mean, securities are, you have bonds, you have funds, you have all sorts of different securities. We focus on debt, we focus on funds, we focus on equity specifically at the moment. I think that the debt industry is quite big. There's a lot of interest around tokenization. We are trying to be quite generalist, but we're also at the same time specializing. We're doing a lot of debt work for enterprises at the moment. Also, there's a lot of funds, crypto funds, traditional funds that would like to tokenize their funds because it makes things quicker. Obviously, you have less fees involved and you have an increase of liquidity. So I would say funds and debt are probably the ones that are more interested in at this stage than pure equity. Because businesses, traditional businesses with equity and ownership, they are by nature a little bit more conservative. There's a lot of watch and see at the moment.
Hmm. I feel like that's happening with a lot of the businesses overall in any kind of blockchain implementation, whether it be bringing in security tokens or just implementing blockchain in their business at all. I saw some studies that said, well, we're thinking about it, we're watching it, but we want to see what other people do that go before us. And so the idea of like enterprise blockchain, for example, I think is following a fairly similar pattern at the moment. In terms of, I guess, the security, the privacy, all these different things for account holders. So let's say that I'm holding 100 security tokens from Ethereum painting behind me here, just as an example.
Yeah.
How do I ensure my privacy if I don't want people to know that I'm holding this? I mean, is there any kind of legal problems in terms of protecting the privacy of the people who are actually holding those securities?
Absolutely. I mean, we're seeing the same trend. I mean, what we've built is a hybrid blockchain. So we have a public blockchain and a private blockchain. And the private blockchain is the connection between the issuer, so the business as an example, and the investors. So all private data is held in that private blockchain component. The public blockchain only has the transactions. So asset A moves to investor A, B, C, and D, fully hashed and encrypted, and you can't really tell who it is. That's really, really important. The privacy element is really important. At the same time, as an investor, you need to disclose full KYC AML. You need to understand if I'm invested in business XYZ, I need to understand the name and address of the person and all the details. It needs to be registered. Because you're an owner in a business, you can't be an anonymous owner in a business. You can potentially have a beneficial owner or proxy, but behind it you have real investors, and those investors need to be by law disclosed. So there's no such thing as anonymous security tokens, in my opinion. And we're seeing a lot of projects or a lot of businesses at the moment that jumped onto STOs. Having issues with Ethereum and other open source platforms because they all have to build some sort of a funky middle layer to kind of like simulate that kind of like metadata name and address stuff because by nature those blockchains are anonymous. You have a token, you can transfer it to another wallet address and all that, and you don't really need all the KYC and AML details. But within the securities and equities world, that's just not possible because as a business owner, you need to tell the authorities who are your shareholders, who holds a stake in your business.
It's also, these 5 Ethereum addresses.
Yeah. But also, and this is what a lot of people forget. A lot of people are moaning, anonymity. I don't really want to disclose my details. Now imagine that business defaults and you get an administrator that runs the business. That administrator will get in touch with you as an individual and say, hey, these are the legal ramifications. This is what you have. You can actually sue this company. Now you can say, oh, well, I like to be anonymous, but when I have legal, until then, right? So a lot of people forget you have actually rights as an investor that needs to be protected as well. And that's why disclosing names and anonymity anonymity just doesn't work in that sense. So.
Do you think that we're going to see, I guess, an opening up of the security token industry to more mom and pop regular kind of investors? Because obviously there's been a big trend towards accredited investors in ICOs, for example. Recently, it's mostly been going to the venture capital funds and other accredited investors. Are we going to see a similar thing repeating here in the security token industry where it's the security tokens are really just for accredited investors, or will we see more of a democratization of finance?
I mean, we are really hoping for democratization of finance. If you look at an IPO, 80, 90% of the IPO goes to, I mean, the regular snapshot of any publicly listed business is 80% are institutional investors. And then you have a handful of retail investors. And I mean, this is the dirty secret in the industry, but retail investors, no one likes retail investors because they're noisy, they're not educated, they're very volatile. Whatever you see in the crypto with the 5, 10, 20% swings day on day on tokens and all that, that's retail sentiment. Those are retail investors. They catch the news and then they're like, oh my God, I'm going to sell now. Whereas an institutional investor is usually a bit more balanced, right? They have a more long-term view, a 3 to 5 year view. So I think within the security token space, it will be the same as in other industries. You'll have a large degree of institutional investors because they like the liquidity, they like the aspect of just being able to offload the assets quickly. So the liquidity element, they also like the transparency and all that. But we're hoping that more and more retail investors, your moms and dads, will be able to invest in businesses they actually understand. And our vision is that you have, the coffee chain you love to go to, they're doing an STO. And you as an individual, you buy their STO because you go to this coffee shop every day. You know the owner, you like them, you want them to grow, you feel connected to that business. And in general terms, for any business, the shareholder that is a customer are your best shareholders. And that whole disconnect has happened in the publicly listed world because institutional investors are not your customers. So a lot of businesses have shareholders that have no real interest in the actual business. And we're trying to change that. We're really trying to turn shareholders into customers and vice versa, customers into shareholders for these businesses.
That's awesome. That's such a great way to look at it. And I think that there will be the reality that there will be a lot of projects that they're going to have their STO and they're going to say, we only want accredited investors because of all the reasons that you listed. But there's also going to be a lot of companies that come in and say, we actually want regular people to be holding our tokens for these exact reasons. And there will be different reasons for different companies, but I like that. It's exciting to think that we can kind of change the narrative a little bit. And I think that's really important when it comes down to it. Now, in terms of, I guess, secondary markets, right? So
yep.
You guys at Owen are helping with the creation of all this stuff. And obviously you have the blockchain where the tokens are hosted, but what about the actual markets themselves? So I invest in the project, they give me the token, but what if I want to sell that token for easy liquidity? I sell it on a secondary exchange. I guess we're going to have to go through all the KYC, AML stuff. What about once it gets off the exchange? Can I send it to another person's address? And if they do, then do they have to just do provenance of funds, where it came from, all these things? How do you deal with these kind of tricky exchanges between tokens and people?
Yeah, I mean, the liquidity part, the secondary market is an issue in the industry at the moment. I mean, there's no doubt about that. Anyone that is saying, oh, you've got the exchange X, Y, and Z and all that, it's all going to work. That's all crap, because liquidity is still a problem. And we're talking to a lot of normal traditional stock exchanges. We're talking to some, security token exchanges, and we obviously want them to support our protocol. And my view is, I think it will not work without the traditional markets, the traditional stock exchanges, because they have the liquidity. They can ensure price discovery, which is really, really important. You need to put a price tag on an asset. So at the moment, you go with a share, you go to a stock exchange, and they can give you a price. They can say, your share is worth X, Y, and Z. And that is the biggest benefit of having a stock exchange. I think the stock exchanges we can see a trend. They're growing up. They're looking at it. They're interested in it. At the end of the day, what you're looking at security tokens is nothing new in the sense of, investment vehicles and assets. It's just the speed. It's the settlement periods. It's the flexibility. It's having that direct connection between a business and an investor. But you still need some of the old, models and methods. Yes, there are security token exchanges popping up, but that is early days. They have no liquidity. They have to still build up volume and all that. I think it will happen, but the industry is just not there yet. The industry around STOs is very, 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 very early days at the moment.
I imagine we'll see there'll be a handful of major crypto-based security tokens exchanges, but I think you're absolutely right that the stock markets are going to have to be an essential part of this. And look, we see what NASDAQ's doing. We see what the New York Stock Exchange and the whole guys behind the Intercontinental Exchange are doing. They're getting more and more into crypto. And if we think that they're not going to be looking at the security token industry as we move forward, I mean, we'd be crazy to think that they wouldn't have any interest in that, because it's going to save money, quicker settlements, more liquidity comes in, more trading hours. It works overall for them in terms of being more profitable and providing better services for their customers.
Absolutely. And they don't see it as crypto. We speak to a lot of traditional businesses and we're talking to them. They don't even like the term token. They hate it. They see it as digital assets and a further digitization of assets. And I think people need to get away from this whole crypto and, there will be a side industry. It will all merge into one, but with better technology, with much better services for the mums and dads, with hopefully less fees, because that's the ultimate aim. That was the same aim with Bitcoin, democratization, everyone can, and no kind of central authority managing that. I think we will see some of that, but we don't see it working without the traditional world. It's just not going to happen. And I think even tokens, the name as such, will evolve and change, because traditional world, they don't know what a token is. They understand a digital asset. I think the naming conventions and all that will change over time as well.
I guess when it comes down to it, they don't really particularly care, like blockchain, whatever. Is it quicker? Is it faster? Is it cheaper? That's what I want to know. I want the results, not the technological stuff that goes behind it necessarily. They're not enthusiasts of decentralized technologies. They're here to make a buck, and that's okay. Yeah. That's their game, without a doubt. Now,
we speak to.
Go ahead.
Sorry. We speak to like really large asset and wealth managers, and you sometimes have a CEO. He's 85 years old. They don't want to hear about blockchain. It doesn't really. They don't want to talk about the technology. They want to understand, what does it do for me. What are the fees? What about the technology? Is there certainty? Can you reduce my counterparty risk? So can you reduce my risk as a business? Mm-hmm. That's the stuff they're interested in. They're not interested in the technology. Technology, they know, evolves every 10 years, every 20 years. You get a whole new range of products and services. And they see blockchain as the next step, but they're interested in, what does it do to my business? Yeah.
That's it. What's it do to the bottom line at the end of the day?
Absolutely.
But all that being said, you guys have a cryptocurrency. So there is is it CHX? Is that the ticker name for the OWN token? So what role does that actually play in your ecosystem?
Yeah, well, CHX is used in the pure sense as a utility token. So, all the transactions on our own blockchain are handled by CHX. So if anyone does a vote on the blockchain, we have 10,000 shareholders and you vote. So there will be 10,000 or 100,000 transactions, and there's a fee associated to that, similar to other blockchains. We also use the CHX for staking. So we have developed a self-service issuance platform, so people can basically issue and generate their own tokens. Our aim was to do this really quickly. So within 5 minutes, you can go onto our platform and you can issue a token, and you can send it to your own private investors, because there's a lot of private investment networks that are using and utilizing that sort of service. And for any basically commit and transaction, there's a CHX, there's a fee, but we're also staking those businesses. So if those businesses will do, $1 million worth of an issuance, 1% of that issuance will have to be staked, and you're using CHX for that. In addition, we also run or have master nodes, because we're running validator nodes in the background up to 100. And in order to qualify to be a node operator, you need to effectively stake a minimum of 500,000 CHX. So there's a lot of use cases around it. But what you cannot do is you cannot buy equity with CHX. It's not a cryptocurrency as such. You cannot purchase anything other than for the transactional side or for the nodes as in terms of rewards, because it is a utility token. It's nothing else.
It's not a settlement token. So when the coffee shop has their STO, mom and pop cannot use CHX to get their shares or their security tokens for that.
Yeah. And what we've done is on the platform side is we're implementing a lot of payment processes and all that, where CHX in the background will be converted, but to the end user at the front, they don't deal with private keys. They don't deal with hashes. They don't have to deal with crypto. We're not even supporting Ethereum and Bitcoin. We're supporting US dollar, euro, etc. Because again, these businesses, they don't know what cryptocurrencies are, and we don't want to overcomplicate things. We're building, and we've built a product for the mainstream market and not for the cryptocurrency crowd as such.
Well, we got to bring the mainstream market in, and I think there's a lot of we in the cryptocurrency crowd, we are willing to go through the trials and tribulations of sending Bitcoin from point A to point B, because the reality is anyone who's listening to this conversation, you're early. We're still in the early adopters, and there's maybe some of the moving into that second stage and all these things, but realistically we're very early. There's 7+ billion people in the world, and only a few million people, maybe 10, 20, 30 million people, whatever, own cryptocurrencies. Very small picture in the grand scheme of things. And much like how there's not a lot of people who get really excited about different internet protocols, they just know that it works. They know they can go to Facebook and just share pictures, and that's kind of the same experience that they want from investing in anything else like that. So it's really important to get moved in that direction.
Yeah, correct. It's very early days still. Yeah.
Is the ICO dead? Long live the STO.
I think ICOs aren't dead. I think there are use cases where utility tokens make sense, and we're hoping one of our use case is a good example of a good utility token. But I think the ICO market has matured, and the ICO market certainly has helped those new digital assets to grow up. Regulation and compliance and things to catch up. What I loved about ICOs was the democratization, right? Anyone could run an ICOs. Unfortunately, when you have these sort of new methods, the bad actors come in first. And I think a lot of people got burned. And now through this kind of bear market, I think a lot of it is being normalized, and, the bad projects die. Investor sentiment is improving. People are more careful. Hopefully volatility isn't as crazy as it used to be. And I think over time it will probably stabilize. I hope there is still a need in future for utility tokens, but contributor sentiment is low. And I think a lot of projects still have to prove that they are, that there's validity for raising tens and hundreds of millions of dollars.
Or billions.
which I think is doubtful. I mean, why would anyone need more than a few million ever, right?
That's right. Make sense. To develop software. It's kind of crazy. Some of the ICOs we've seen have just stupid exuberance at the height of the ICO craze, and a lot of money was spent. A lot of it was thrown away. But there was also great value created, and there are some good utility tokens out there, and there will be great utility tokens that come in the future. I'm very excited about a lot of tokenization, whether it be tokenization of securities or whether we'd be talking about non-fungible tokens, cats or art or whatever it is going to be on the blockchain, or just having loyalty rewards points or tokens that you can use on a platform to get a discount and all these things. That it's still very interesting, but in terms of the profitability, I think for some of these ICO tokens, I don't know. Next bull run, we'll probably still see insane valuations for them. Let's keep it real. Let's keep it real, Sasha. They're going to moon. But it's just, that doesn't mean that they have the value that the market is assigning to them at that time in a real platform, in a real ecosystem. That's the challenge, I suppose.
Yeah, I think trading and speculation is killing a lot of projects in the market. I know it's fun and people love to do it and all that, and obviously the technology allows you to do it, but people need to really judge the underlying value of projects, platforms, and all that. And I think that the jury's still out in that sense. Yeah.
Do you think that regulators are keeping pace with the upcoming security token industry?
We talked to a lot of them, and yes and no. So we are incorporated in Liechtenstein, and this is kind of our home regulator. And the FMA in Liechtenstein, they are very, very modern. They understand tokenization, and they even last year they understood that ICOs and utility tokens is just kind of like a short-term thing, but tokenization of assets, they understood it. But they're alone from a regulatory perspective. We talked to the guys in Hong Kong, to the guys in the US and all that, and they all understand the technology benefits, and they understand what tokenization brings. That they're definitely very interested in DLT, in the blockchain technology as such, but they were and are very concerned about just the anonymity and basically the money laundering aspect of a lot of the tokens. And that naturally scares people. Obviously, also you have, the big banks, and you have a big lobby in traditional financial services, and they're obviously trying to kill a lot of projects. They're trying to kill a lot of innovation in a sense, because they're protecting their big basket. We talked about 10% fees. If you're a big servicer and you charge 10% fees, you don't want that. You don't want that to disappear. You want to sit on it.
Of course,
so
you're a threat to these guys, Sasha. You're coming
Absolutely.
in saying like, "Hey, we're gonna undercut you by 7 or more percent on average."
Yeah.
Like,
yeah, yeah. But innovation and disruption happens in that sense. So it'll happen. But yeah, the regulator has to catch up, and the regulator is generally always lagging, because they don't have the capacity, they don't have the knowledge, they have to listen and to everyone, they have to listen to the industry. They get a lot of different views from all the perspectives, even government, or they're all a little bit behind. And even stock exchanges are so far behind. They still think they need to prepare their platforms and services for ICOs. And we know that the ICO period has slowed, but they're still preparing for it. So they are, all the traditional guys are years behind.
It's kind of crazy when you think about it. And obviously you have these conservative organizations that are trying to wrap their heads around a world that's changing so quickly around them. And I can understand the problems. And we have seen some innovation coming from different banks or exchanges, the big stock exchanges that are actually getting interested, and we want to be involved in this. But like you said, it's a slow process, and they have to work through all the regulators too. And it comes back to the regulators, the businesses are conservative, all these different things. Now, Liechtenstein, that's in the EU, correct?
Yeah.
So that gives you access to the EU-wide market, I would assume? Or is
it
kind of like maybe, so you can operate across the EU. And what about the own worldwide? I mean, if I'm in South Africa or Hong Kong or New Zealand, can I work with you guys, or is there some restrictions based on geography?
No. We have a wide partner network. So, for example, we have a broker-dealer partnership, and we will have more broker-dealer partnerships in the US. So in the US, to basically bring investors to businesses, you need a broker-dealer license. You need to be SEC and FINRA approved. And we're working with local partners so we can offer effectively tokens to the US. We obviously, through Liechtenstein, have full European Economic Area access, so we can issue tokens to retail investors across Europe. In many cases, you have to create a prospectus. You have to get the prospectus approved. You have to get regulatory approval. But there are also limitations. So, for example, you can basically issue tokens to less than 150 retail investors per European country, for example. As an example, there are further restrictions that we can help businesses with. And we're also working quite heavily in Asia, Hong Kong, Singapore, with local partners as well. So we can issue the same tokens in Asia, Southeast Asia. In Africa, we've not really spent much time. We've got a few partners in Africa as such. But yeah, I mean, our view is to have a global network where we bring businesses together with investors, and it's a true global offering. That's our long-term goal. There are restrictions, for example, as I mentioned before, the number of investors or the amount of money you can raise. Or in the US, you need to go through a lot of kind of exemptions if you want to do that. You have holding periods and this sort of stuff. But over time, we're hoping, in a few years, this will all become a bit simpler and easier once, as you said, the regulators will catch up.
Very, very interesting. Sasha, I think we're going to leave it there. That's been just a train of information, of really great information on the security token industry, and obviously a bit about what you guys are doing at Own. If anyone who's listened to this is interested in learning more about what the guys over at Own are doing, there's a link down below so you can go check out the website and see what they're doing. And of course, if you have your own business and you're interested in taking it to the blockchain, get in touch with the guys over at Own and they can help you go through that process. Sasha, thank you so much for coming on the show. It's been very interesting.
No, it's been a pleasure. Thanks for the great questions. And again, to you to check us out. We've got a lot of blogs and details around equity and ownership and all that. We're issuing an ebook over the next few days. So the ebook will contain everything what you need to know about security tokens and how you can issue tokens, the regulation, the legals around it, what sort of exemptions. So check us out. Yeah. And thanks for your time.
Awesome. Thank you.